Hey guys, remember to like the video and hit subscribe.
Pumping stimulus into the economy such that we could maintain the multiples that we had gotten used to in the stock market. And your point was, like, the stock market falling isn't a catastrophe because this isn't Main Street. You know, this will largely affect rich people. It won't affect poor people as much. But that argument has now been perverted and advanced into a total untruth, where they make the claim that the stock market has no correlation with the real economy, that the idea that the stock market falling has no effect on
anything
people at all, which is not true at all, because actually the stock market is a reflection of the real economy.
Something real.
Yes, it's not one-to-one, but if you see a contraction in earnings, if you see an increase in tariffs, which means that the burden is going to be shouldered by the companies who are importing those goods, then what we're going to start to see is, one, an increase in prices. We're expected to see above 4% inflation this year. And two, we're going to see layoffs. This is going to massively affect the job market. So whenever I see that argument that a lot of people seem to be making right now, well, this is only going to affect rich people. That's actually not true. Yes, it does affect rich people. Yes, it affects multiples and people whose assets are largely held in the stock market. But it also is going to affect poor people. If you have a recession in the stock market, eventually it does trickle down into the real economy.
But keep in mind, again, and I'm going to harp on this over and over again, a lot of the problems here of people thinking that this is all fake money and it's not real or whatever, Democrats need to have some responsibility here as well, because for as long as they've been saying, you know, billionaires are evil, the top 1% has 99% of the stocks and blah, blah, like, if you've listened to this type of rhetoric for your whole life, then somebody complaining about the stock market, maybe it doesn't seem like it matters that much. What, aren't stocks just for rich people? Like, I didn't get fired today from my job. Like, who cares?
And you're going to see massive job losses, massive layoffs. It's going to be so hard to enter this job market if you're just graduating from college in the next year or two. So I just think we need to dispel that myth, because what started as an important point about who really owns the stock market has been twisted and perverted into some weird justification into tanking the economy at large, which is going to affect everyone in the US. But I would also like to get your thoughts on that.
The stock market, the Dow and the NASDAQ, are not the real economy. They're a reflection on components of the real economy, but there is some truth to the notion that essentially the Dow Jones and the NASDAQ are essentially the PSA, or the blood pressure reading of the top 10%, if not the top 1%. And what do you know? They've been on a record tear for 15 years, and until a month ago, 72 highs in the previous.
Your bots can send equipment to new platform. Wait, like from space, from one to the other? Or are you just talking about like requesting stuff?
24 months. Until a month ago, 72 highs in the previous 24 months, what have you. And I'm actually a fan of programs that would probably take, not purposely, the stock market down. If you were to say that the alternative minimum tax on corporations who have now enjoyed the lowest tax rates since 1939, if you were to say corporations aren't paying enough taxes, we're going to have an AMT of 30%, that seems reasonable, but it'd be an enormous hike in corporate taxes, because many of them, including the biggest names in business, don't pay any because of the tax code. The stock market would go down because they would have lower earnings. I'd be in favor of that. I think people of your generation need disruption, maybe even if that means hopefully getting a chance to buy real estate and stocks at a lower price. Disruption and churn is a key component of transferring wealth back from the incumbents to the entrants on a regular basis. And as I've said, we've done everything we can, specifically run up your credit card to smooth out disruption such that I can stay rich. If we were to raise minimum wage to $25 an hour,
Jesus,
McDonald's and Walmart stock would go down substantially. I'd be in favor of that. I think it's worth it. This is a double whammy. This goes from bad to worse, in that it's not only does the stock market go down, but 98% of companies that export products are small and medium-sized businesses. 43% of U.S. agricultural exports go to our free trade partners who've agreed to have lower tariffs. That's up from 29% in 1990. 40 million American jobs depend on trade. And that you'd think, well, out of 355 million, that's not a lot. Only 150 million Americans work. So you're talking about a quarter of our jobs are dependent upon trade, and we're going into a voluntary, unnecessary trade war. So there are certain components. They're trying to play the everyman. Well, it just impacts the rich. Well, okay, that's a fair argument. But when you go after policies that reduce prosperity, reduce economic growth, reduce the demand for products across every company, including those that are not publicly traded, everyone's going to feel this. Everyone's going to feel this. So that just doesn't hold water. What I will say, and I just find it, I go back to this notion, look what money has done to us. A friend of mine went to a wedding, and his niece is marrying a woman who's in the Marines. And one of the Marines that was there is this transgender male who's been in the Marines 14 years. I think he works on aircraft carriers or something, repairing things. He's been a Marine for 14 years. He's transgender. He's just gotten notice that he can no longer be in the Marines.
Jesus, that's
I
crazy.
mean, it's just, why would we, when 70% of American males who show up to a recruiting office can't qualify for the armed services because they're either mentally unfit or obese, why would we
turn
risk
people
our
away?
national security for a right-wing hateful trend through the current administration? When we hear about people being arrested because they didn't narc on people who were planning a pregnancy, when we hear about women in emergency rooms being turned away and risking sepsis in the parking lot, but the only thing that gets the most powerful Democrats, or quote-unquote Democrats, down to Mar-a-Lago is when the stock market goes down. So look, whatever it takes for people of power to begin recognizing that Ben Shapiro isn't upset about anything until he frames this as a tax
very
increase.
upset
Now he's like, okay, this is the largest tax increase in history. No, it's not, Ben. The largest tax increase in history is trading off tax cuts for increased taxes on young people in the form of deficits. Deficit-funded tax cuts are essentially a tax increase on young people, and they're inefficient. Trickle down just doesn't work. It doesn't work, boss. But the Republicans are now outraged because they say this is an unconstitutional tax increase in the form of tariffs. But if this is what it takes to get people's attention, fine. For me, this is like number 15 on the list of shit that just outrages me. But if this is what it takes to get to the attention of powerful people, fine.
Well, but there are ways to do it without making poor people poorer.
Fair enough.
There are ways to, extract the obscene wealth that we've been seeing accumulated among the rich. And it appears that that's the justification that they are using for this policy. But there's a way to do that which doesn't also make poor people poorer in the form of layoffs, a tighter job market, and, of course, inflation. That's the most important impact we're going to see. This is going to be massively inflationary. It's going to hit poor people the hardest. And the way you do that is, as you say, you get your act together on taxes. That's how you do it. And so I think the double whammy, as you say, is the right way to put it. Yes, this is going to affect rich people negatively, but it's also going to affect poor people negatively. And there is a way to implement policy that can address the massive wealth inequality that we've seen over the past few years, but to suddenly, after making this insane policy, then say, this was all part of the plan because look how rich everyone is. Having enriched those same people for many, many years, to me, it's just, they're completely fumbling the ball here. But I want to move on to what people can actually do about this. So, we lost more than $6 trillion in value in the stock market. The dollar shed 6% of its value. The odds of a recession, according to JP Morgan, have now risen to 60%. So in all likelihood, we can expect a recession in 2025. I'd just like to get some advice from you. And let's start with young people. Let's start with me, for example. This could be the first real recession of my professional career. What would be your advice for a young person like me? What should I be doing with my money? And what exactly should I be worried about if a recession is coming this year?
So action absorbs anxiety, and there's two components to this. But at the same time, you don't want to make decisions from an emotional position or from an emotional complexion. So a couple things. In terms of your own personal activity, I never think it's a bad idea to say, where could I save money? And
Wait, real quick. So is it just like a percent chance that I roll a really rare asteroid collector? Could I roll up to any percentage chance, or
dollar cost average in and start investing more?
dollar
Because,
cost
quite frankly,
average?
this
There
might
it
be-
is.
It might be an opportunity. You always want to be in the market. I think it's always a great time to say, how could I cut my expenses as a young person and invest more? So ignore the markets for the moment. The first question in terms of real action, what could I do to reduce my costs, get one of those apps to look at my subscriptions, one glass coffee, downgrade my gym from Equinox to whatever, a boxing, whatever it might be. Partner with my boyfriend or my girlfriend to try and save a little bit of money. But
How do I see the
we're gonna
chances of getting a
in case the
thing?
shock comes, we're ready or more ready. And if it doesn't, any incremental savings we have, we're going to invest in the market. I think you always want to be invested at your age. It is impossible. In the last 3 years, we've had up 24, up 27, and down 10. You couldn't pick which of those years came sequentially. So don't try
On the
and
module.
believe you can time the market. Your action is to think, how can I be more financially responsible and free up more money to invest?
Well,
In terms of your investment strategy, and this is the email and the text I got, what should I do? What should I do? I'm freaking out. What should I do? This is what you do as it relates to investments. Nothing. Because when something traumatic happens to you, and for this, I was shocked how many people I know saw this as a traumatic event. They were watching, glued to their phones, watching their net worth go down 10, 20, 30%. You never want to make a decision from an emotionally fragile standpoint. When you get divorced, girlfriend breaks up with you, lose your job, someone in your life dies, you do not want to make any big life decisions in that moment. You aren't thinking straight. And you want to take action, you want to try and do something. Don't. Wait a while, talk to people before you do anything. Because say you sold everything yesterday. The worst piece of advice in financial history was probably Jim Cramer at the depths of the great financial recession saying, if you can't stand the volatility, then you should sell your position. Can you imagine if you sold your position in 2008 at the lows? Within 14 months, they were back. You want to talk about a hit to your mental health? I panicked, I sold, and it came ripping back. Because this is what could happen. Say at the end of Friday, humans will do almost anything to avoid pain. They just thought, everything's so far down. If you're in tech stocks, you might have been down 20, 30% in 48 hours. I can't handle anymore. I'm just going to cash. You do that Friday at 3 p.m. Because this guy's so inconsistent, because the market is now volatile, or volatility, the VIX has gone way up, there's a non-zero probability on Monday, Ed. He says, just kidding, all tariffs off, and the market goes up 2,000 points. And then what happens to your mental health?
yep.
I perfectly timed this wrong. And your emotions are your enemy in the market because your emotions are rational in the sense that other people are having the exact same emotion and are doing things in unison as a herd, which creates alpha on the other side. And that is, if at 3:30 p.m., a lot of people were thinking, I just need to sell like everyone else, those people generally don't do well because everyone's selling or everyone's buying, right? So you do nothing. Now, over the medium and long term, I think it's a decent idea to say, okay, I want to avoid some of this mental trauma. I want to avoid what I believe is probably maybe a signal that the American run or the historic run might be coming to an end. I think potentially saying, okay, after things have settled a bit, if I have some losses, maybe harvesting some losses for tax reasons, if that makes sense, or thinking about diversifying out into low-cost ETFs geographically. Should I be looking at some ETFs in Latin America, in Asia, in Europe, recognizing that over the long term, demographics and innovation and productivity take the markets up and to the right over the long term. I want low fees, but to just be in the S&P, even if it's the SPY, you think you're diversified with an index fund? No, you're not. So I do think it might be time to think over the medium and the long term, should I be diversifying into other markets that might recognize more growth in the next 5 years, given that we look in America to be developing a reputation for a less ideal place to invest, meaning the flows of the rivers of capital that have been one way into the U.S. for the last 15 years are about to reverse. And we might experience that insurmountable foe of multiple contraction. I think you think about this, you start talking to people about it, but you don't start selling everything and going to cash. When you're your age, and I think even when you're my age, You want to be diversified. You always want to be in the market. The markets could go up 1,000 or 2,000 points on Monday. They could go down another 1,000 or 2,000 points. So you just want to think, you want to start thinking about how you make yourself more bulletproof, set yourself up for success, but you do not want to make big decisions from a position of emotion.
Yeah, I think the worst thing that you could do right now is panic sell. And I just want to make clear for everyone who's listening to your advice right now. You're not saying sell your S&P and go buy the Euro stocks. You're saying hold your S&P, take what cash you have, and go diversify into other markets. And I think that makes a lot of sense. The other thing that a lot of people are talking about right now, though, which I'd like to get your thoughts on, is buying the dip. Hedge funds,
Buy the dip.
they sold over $40 billion in stocks on Thursday, which is the highest net sell-off from hedge funds since 2010. Meanwhile, retail investors bought almost $5 billion worth of stocks on Thursday, which is the highest net purchase from retail investors in the past 10 years. In other words, institutions are selling and retail investors are actually buying. They are leaning into it. They're buying the dip. So what are your thoughts on buying the dip right now? Do you think this is a good time to buy the dip, or do you think we should be waiting a little longer?
It's impossible to know. The only strategy I'm comfortable recommending, or actions I'm comfortable recommending, is if you find that you're 90% in U.S. stocks or 95 or 100, there's a lot of people that are 100% in U.S. real estate.
I
in US,
love
and their
this
entire
country.
net worth is tied up in the U.S. Because of innovation
Hell
in the
yeah.
financial markets, you can now buy a low-cost ETF in Brazil or in China
That's
or
not
Vietnam
patriotic. Don't
or
do that,
all,
guys.
all of Europe. What I'm suggesting is you look at your portfolio. You don't do anything in the immediate term because who knows what's going to happen with this volatility. And you think about diversifying. And also, I always think it's a great idea. If you have cash or you can figure out a way to get some extra money together, I love investing. But I think this notion of buying the dip, we don't know if this is, if we're going to look back. It's not as if the market is cheap right now. It's not like, oh, everything's on sale. And I remember I was an advisor to a guy named Phil Falcone at Harbinger Capital. And Phil made one of the great bets in history. He bet on the subprime crisis. He went from $300 million in AUM to $22 billion. And I remember coming in March of 2009 or saying to him, like, oh my God, we got to buy Williams-Sonoma. It's at $5 a share. We got to buy. And I remember him saying to me,
I know you've not been a fan of international stocks before. Are you reconsidering your overexposure to the American markets? Or do you believe American exceptionalism will hold through? It's not so much about American exceptionalism, more so it's about like ease of capital access. Like, can other people invest in American markets, which I think was very easy. And it's about connectedness of American markets to other markets, which was up until now also very connected. So I guess like my very layman's thought was, if you have very high exposure to the U.S. market, in a way, you're kind of buying exposure to the global market because the U.S. market is a global market. Now, is that going to be true going forward? Who the knows? But that was my thought before. I have a little bit of VT, I think, but
what do I sell?
in my mind, if the U.S. market were to completely and totally self-destruct, it's probably taking the world market with it. That was my thought.